Good morning. Today is Tuesday and it's February the 6th. The time right now is 11:22 in the morning, and we are soon going to get to noon. Overnight, we have very quiet trading, although we have the release of the ISM Services PMI numbers, which is the the Manufacturing Managers Index, which show a big bump up in the numbers. Market was expecting 52. Now, anything above 50, of course, is expansion. So the market was expecting a good number at 52, but the number that came out was a lot better at 53.2. So this is a lot better than market expected. However, equity market did not react. In fact, it stays sidelined. In the Dow Jones, we can see the high traded was at 38,782, 83.62. And this obviously was traded last Friday on the back of the non-farm payroll. We can see that this is actually laying the foundation for a technical pullback at the minimum. So if there's going to be a pullback, the immediate target is the 50% of the rise from 37,123 to the high of 38,783. So we can see the 50% mark is about somewhere around just under 38,000. So watch out for a pullback into these levels. And in the meantime, we want to see the other equity index. S&P 500 also do not have a new high on the back of a very positive PMI numbers for the services sector. And the high traded remains at 4,975.29, and it's just a touch under the very nice number 5,000. So again, a call for a technical pullback is actually not unreasonable. After all, the market has risen 3 months consecutively to trade to a fresh all-time high. So a little bit of pullback is actually healthy for the viability of this long-term trend that we see. It has been very powerful since October of last year. So the immediate target will obviously be first the January close at 4,845, followed by the 50% mark of the rise from 4,682 to 4,975. That level is 4,828. So these two levels will come into very sharp focus as the market pulls back. And we also look at the Nasdaq. Now, Nasdaq has a marginal high last Friday at 17,682.29, and it did not come back. It did not pull back as deep yesterday. In fact, it is the one with the least pullback overnight. We can see the market only dropped about something like 0.2% compared to Monday's closing. So we can see that this market is actually quite firm. Now, if we're going to see a pullback, again, the same thing that we can expect in the S&P 500 can be expected in the Nasdaq 100. After all, the two index has many cross-listing of shares of the same company. Now, the mega stocks are obviously also listed in the Nasdaq as well as in the S&P 500. Now, the immediate target, if we're going to see a pullback, will be the January close at 17,128.7, followed by the 50% retracement of the rise from 16,249 to 17,682, and the level is at just under 17,000. So again, 17,128 to 17,000 could be the target if we're going to see a pullback. And over in Asia, we can see that Asia market has no lead. The Nikkei 225 did not have a fresh high despite last Friday's massive rally in the Wall Street itself. So the high remains at 36,490, and prices as we are speaking is pulling back to test the 16,000 levels. And if we do see further losses, we could see a development of a three-wave pullback, possibly targeting somewhere around 35,200 to 34,900. So if we can see a pullback here, this could be a better area for those who are looking to buy, because this is looking to be a corrective pullback. And over in the Hong Kong market, you can see Hong Kong market has actually found some wind behind its back. You can see the market is rallying right now. The market right now is trading at 15,962 in the futures contract. And this is on the back of reports that there are fresh inflows of capital into the Chinese market after the Chinese government actually opened up the financial services sector, allowing foreign participants to own 100% of these companies if they open up. So there is a bit of a positive spin here. After all, the Hong Kong market has been falling for 3 years in a row, and we would like to see some kind of bounce. And if we get a bounce, technically we can see a three-way bounce originating from the low here at 17,796. Of course, this is referring to the futures contract traded in the Hong Kong Futures Exchange. And if we do see the three-way equality move it could target anywhere in the 17,000 levels. And again, these levels are a magnet for prices because we can see the October, November, December closes are all very, very close to each other. So this could be a natural magnet for price to head to. And over in the currency markets, we can see that the dollar remains very well bid. This morning, we have a high at 104.46, which is the highest we have seen the dollar index traded so far this year. And this is within expectation. Earlier on, I alluded to the possibility that dollar index may actually challenge 104.22 to 104.44. So with this morning high at 104.46, it has already hit its target. Now, interestingly, at the top here, we see a reversal pattern. So right now the market is actually right for a pullback, at least technically speaking. And in the euro, we can see euro also traded to the low of 107.23. Now, if you look back, 107 has actually been visited once before in December. So it's the same price, 107.23, 107.23 here. And technically speaking, this one is slightly marginally lower than the one traded in December. So we have a double bottom right now on the euro dollar, and it's also right for a rebound, technically speaking, because we also see something similar in the reversal pattern here in the 4 hours time frame. Now, what surprises me was the sell-off in the sterling. Now, sterling has always been one of my favorite trading pair, and I was actually having quite a positive outlook on the sterling. However, that did not quite work out this time. The sterling this morning actually decayed all the way to 125.18, and this is also on the back of a low traded here previously, and that low was 124.94. So we are very close to those levels, and in fact, prices are now within this bracket of prices. They may actually elicit some kind of buying interest to re-emerge from this level. The level is 125 even to 125.50. So let's see if the market can actually bounce off this level, and if it can, obviously the first target will be the November close at 126.20. And over in the Aussie dollars continue to weaken to 0.6470 thereabout, and this is not far away from the previous low here last seen in November of last year at 0.64 half. So again, everything is looking soft relative to the dollar, so this could be the sentiment going forward. You can see the dollar strength is also reflected in the dollar Canadian. However, the dollar Canadian has actually taken out the most recent high in January 18, and this is 135.44. Okay, so we have a marginal high relative to 135.42. So we have about 2 pips higher than the previous swing high in January, and this market is actually also due for a pullback. If we see a pullback, the 50% mark will be actually the natural point of gravity. If that's the case, a pullback to 134.55 could be in the works. Okay, so look out for some kind of buying positions here. Anywhere between 134.50 to 134.70 will be a good level to consider picking up some long position for further rise in the dollar. And over in dollar yen has a double top this morning. Okay, we have a marginal high compared to last month's high. This morning high at 148.90 relative to last month high at 148.80. And not sure whether the market will pull back. If it does pull back, I think it will be quite minimal. Ideally, we can see a pullback back to 145.40 levels. That would be ideal, but don't put your hopes up too high because the market looks very, very firm with very little pullback so far, even on the lower time frame. And as far as gold is concerned, gold is continuing to decay this morning to $2,014.96. So this is the lowest we have seen this month so far. And let's see if there's going to be further downside. If we get a bounce, which we obviously are looking at a bounce right now as we are speaking, currently the market is up $10 from the low at $2,024.20 thereabout. And if this extend higher into $2,034 to $2,042, that could be a good candidate to actually pick up some short for further decay in the gold prices, because I have always alluded to the possibility of a larger degree fall from the all-time high of $2,148, $2,149. Okay, if this is the case, the market could be gunning for $1,980 at the minimum. Okay, so do watch out for further losses, possibly in the gold market, but ideally we see a bounce first before the market actually go under. And in the silver market, silver seems to be underperforming gold throughout the whole of last year, and so far it is still the case for this year. So likewise, if you see a bounce back into the October close of about $22.82 to the January high close of $22.93, that could be a bracket of prices to look up for further decay into $21.74 to as high as $21.92. Crude oil. crude oil continues to come off, even though we have seen an escalation in the Middle East. We have seen the U.S. military actually hitting targets in Iraq and Syria in response to the militants' attack on military bases in both areas. And we are also receiving reports that U.S. forces are pulling out of Syria and Iraq. And we obviously have seen an escalation, although there is no direct hit on the mainland Iran by the U.S. military. If that happens, that could be really troublesome. And despite that, we can see oil prices continue to fall. The low traded overnight is $71.37 in the WTI, which is the West Texas Intermediate crude oil. And the market have a strong bounce, and this bounce may actually underpin further rise in the crude oil prices. So look out for a possible pullback, very, very shallow pullback. And if you do a simple 50%, that will mean ideally the price come back to $72.30 onwards. I think it will look very attractive to position buy for the continuation rebound, perhaps even to challenge the January close of $75.78. And let's see what else in Bitcoin. Now, Bitcoin has not going anywhere. Yesterday, we see an attempt to rally above the $43,400, but it couldn't sustain, and the market ended up with a bearish engulfing bar, and the market now is likely to come back down again, perhaps even to test the 41,600 to as low as 41,000. So if the market do this in the three-way pullback, this could be a good area to pick up some long position, in my opinion, for a challenge of at least 45,500 to 46,300. So there you have it. Again, tonight we have very little economic data. In fact, for the US, there is none. So you expect another quiet night of trading. So I will come back to you tomorrow with further updates. Bye-bye.